We're not going to find out much about the new iPhone 8, when it's going to come out, if they're going to have enough supply. So how difficult will it be to call the market?
They want 63.5 for 25.
Yeah, when you look at the tech industry and how it's led the market, it's one of the key facets of what we're dealing with in terms of the ability of the economy to grow and also the people's perception of the new economy. Right now, there's three competing theories: the reflation, deflation, and the new economy fruition, which is these tech majors. And those are the three theories that we're working on.
Sarah, if Apple stumbles, does it take the market with it?
Well, at 3.6% of the S&P, I think it's going to have to. I mean, in the end, a lot of the outperformance of some of the larger stocks has driven some of this index performance. So I think that if it does, but I'm not sure that this is going to be the quarter that will matter so much, because I think that people are waiting for the 8 and what's going to happen with that. So I'm not sure that this is going to be the quarter that is the most important. But I think that it's, I mean, whatever they're forward looking is going to be as important as what's just happened.
I mean, the reason I asked the question is not just based on the member weighting. I mean, will it spark some selling elsewhere? All that money that's flown into tech for various reasons, is that going to be a trigger point?
Well, I think you've seen some of those big tech stocks the last couple of days. The NASDAQ, like the Dow was outperforming and the NASDAQ was having a little trouble yesterday. So I think you saw Amazon come down, you saw Google come down. So I think that there has been a little bit of pulling back from that. I think if there's something like that with Apple, then I think that you could see some continuation of that. You've seen the QQQs had been very strong, and that wasn't quite as strong the last couple of days. The Dow was really much stronger, even than the S&P as well. So yes, I think that if there is a feeling that there is something wrong in tech land, there is a lot of money that's been going into tech, so I think some of that could come out.
So Barry, as you look at this remarkable run-up in tech overall, sort out for us, on the one hand, really structural changes. As we've talked about, globalization plus digital is really changing all of business globally. That's part of it. Another part of it, though, is perhaps fear of missing out. How much of the valuations we're seeing right now are attributable to each of those?
It's not unusual to have just a handful of stocks drive the market, and the market today has actually got pretty good breadth. One of the things that we do find, though, is these asset-light platform companies that require unit growth and don't rely on pricing power are well positioned in an economy without pricing power, where unit growth is not that strong either. So they tend to be standouts.
Like what?
Obviously, you were talking about the FANG trade, and that's Facebook, Amazon, Netflix, Google, and of course Apple could be added to that. So these are tech leaders, and I would throw in some of the health tech. Biotech has the unit growth, and they also have pricing power. And that's been attractive to investors in this macro environment.